Video, I'll be teaching you guys the best crypto trading strategy, which is my crypto trading strategy that I use making money from the markets. This strategy works at all time. It is called the smart money trading strategy or the smart money concept. And guys, if you have heard about this and don't know how to use it, today you are going to learn. All I want you to do is simply like this video, subscribe if you are new, turn the bell icon, and join my Telegram and WhatsApp community. Links are in the description box. The first step in making use of my crypto trading strategy is for you to read the market. It's called market structure. It's able to tell if we're in an uptrend or downtrend. So how do you identify a downtrend? If you see prices is making series of higher highs, higher lows, higher highs, and higher low. This says that we are in a uptrend. By series of higher highs and higher low, right here is called higher low. This is called higher high, higher low, higher high, higher low, higher high. If you take notice, price is going above the previous high there. See, this is called break of structure. If price retraces back, then goes up and breaks the previous what? Breaks the previous high. That's what they call break of structure. So if you see price doing like this, breaking the previous high, I know that market is breaking structure and we're in a uptrend or bullish trend. While for the downtrend, you see market doing what? Breaking straight to the downside, making series of lower low, lower high, lower low, lower high, lower low, lower high, and lower low. So you agree with me that when price moves, there will always be pullback and a forward movement. Like market will surely move forward, then retraces, move forward, retraces. Same thing here, move forward, retraces, move forward, retraces. You get. So now, since the market goes down, there's a retracement of pullback. You get. So as long as market is propelling to the downside, you get, this is what we call downtrend. And also, market is also breaking what? It's also breaking structures to the downside. If you see, market break this previous low. This is a lower low. You get. So it retraces and pushes downward. Like that means it breaks the structure and it get what happen market retraces, pushes downward. You get, as you can see, it also break this structure right here to create another what on that lower high at this particular place. So you see price doing like this tells us that what the market is breaking structures to the downside. I believe you understand. The third types of market structure is what's called the energy market. In this particular one, there is no clear market structure. Market is just consolidating on energy in a specific place, having equal highs and equal low like this. Like market is going sideways. So in my trading strategy, see market doing like this. There's no clear pattern. You can't trade yet. We don't trade. We only trade when you see market breaking structure to the upside or breaking structure to the downside. Now, the next thing you need to see for you to be able to use my trading strategy is what I call identifying your point of interest. Now, to do this, the first thing is once you the market structure from the higher time frame, 4 hours, 1 hour time frame, and you found out that okay, we are in a uptrend, for example. The next is a go to a 15 minute time frame. What we're looking at from 15 minutes time frame is the most recent break of structure to the upside. So, for example, the 15 minutes time frame, you see that prices what moves forward, retraces, and there's a break of structure to the upside. You get what you should be looking forward. What should be looking for is what the most recent. What causes the most recent break of structure to the upside? This is the break of structure to the upside you get. So at this place, there's a break of structure in the sense that this was what this was the previous market price broke it and went upside again. So at this place right here should be what should be your point of interest. This particular place right here should be your point of interest. What we should be looking at is what price coming back to touch this place so that we can actually get a buy. If it was in a downward market, still the same thing. If, for example, price went down, retraces, break structure to the downside. What we should be looking forward is what this most recent break of structure to the downside, which what caused the most break of structure to the downside, which is this because at this place is what break of structure. I mean, this is break of structure. So we're looking forward towards this particular place gate that causes a break of structure toward to the upside. This place it should be your point of return. At this place, you're looking for possible what possible sell options. Now I'm going to explain this further. I don't want to know if you understood to this extent. If you understand, let me know that in the comment section. So once you have identified the most recent break of structure to the upside, what you should be looking forward is what a possible buy option. You wait for price to what to chase it out to this place so that you can buy the coin. You can long or you can short if it is in downward. So other thing you should look for in other confluences you get. Once you see the most recent break of structure to the upside, you should not buy immediately. You should be looking for what imbalances. You're looking for fair value gap and other block. Remember I told you that my trading strategy is called the what? Is called the smart money concept. Smart money concept we look for imbalances and other block. You get. So what is imbalance? If in normally in market or in trading, when the price moves up, let's say we are in an uptrend, for example, so we are in an uptrend, anytime price moves forward, kind of moves forward, market must always retraces to do to close that particular candle movement before it goes up again. Again, price must always come to close it before it goes up again. But anytime there's an imbalance, you see price also goes up, like you see a very large candle, but market might just retraces or might never retrace, or might just retrace small and still goes up again. You get. So this particular distance is from year to year. You get that it is not covered. The price is not covered. What we call imbalance. Well, I'm going to show you this in the chart very soon. But I just hope you understand. So this particular large distance, you get this particular large distance that market should have covered from year to year. Like the distance is too long. Again, price should have covered. Price not covered. It's called imbalance. We don't understand. I'm going to open up the chart to show you an example right now. I just really want to Google to show you this. I also show you this as a chart. Well, as you can see right here on this particular candle, you see that when there's this green candle, you can see price come down to close it. But if you see this particular candle right here, you can see this very long candle. You get this particular long candle, you get this is what we call imbalance. This long candle, and you see right here from the wick of this candle and from the wick of this other candle, there's a space. You get this space, what we call fair value gap, what we call imbalance. Is there's also an imbalance in this particular one. I see this candle right here, from the wick to this candle and the wick to this other candle. There's a space. This space right here is what we call imbalance. So in our trading strategy, you should see an imbalance. You get. There is also another example right here that illustrates it. We see this very candle right here, though there's a very big candle, but there is no imbalances. Okay, guys, because this wick of this candle and the wick of this candle actually closes up, it gets fill up the imbalance. But if you see right here, you can see this very large candle, or you see the wick of this candle or this third candle. If you want to identify favor, you can choose see three candles, 1, 2, 3. You get. So and there's a very second, the middle large candle, the wick of the third candle and the wick of this other candle. There should be what space in between. Now let me show you in chart. So in chart, right, there is this particular trade as you can see right here. So from this particular one, you can use this one if you want. So for this particular candle, this 1, 2, 3, you can see that the wick of this candle or this candle and wick of this candle did not meet. There's little space right here. That space is called imbalance. And if you also check right here, this one is also forming right. And for this, you can see the wick of this candle and the wick of this candle, there's a space in between. So this particular space, what we call imbalance of fair value. This particular space in between, what we call imbalance. This space between. So this is what you should look for. These are other confluences you see. If you see an other block and there's a space between the wick of this candle and the wick of this other candle. And for this particular right, on this one, there's also an imbalance on this particular place right here, because you can see from here to look at this candle is a space. It's called imbalance. So you should be looking to see an imbalance when you want to make use of our trading strategy. Now, so I've opened the chart. And the other thing should be look out for is liquidity. I'm going to explain that right here in the chart. So, on the chart. So if you want to make use of our trading strategy, very simple. Well, the first thing I said is to read market structure. So go to the daily time frame. So in daily time frame, what we're doing is to identify the place that market is moving. Are we in an uptrend or are we in a down trade? You should be able to identify the market structure. So from what I'm seeing right here, it seems that we are in a downtrend or a daily time frame because as you can see, market pushes up over the previous on this place. This was the previous uh lower high. Market broke the lower high because anytime market breaks the lower high, yet we're in an uptrend. And market will get to this place, retraces, doors, break this other high at this particular place. We tried that we're also in an uptrend. But fortunately, market went down and broke straight to the downside. You can see this was the previous lower, higher low, but market do what? Market break this particular one, right, to the downside. And this place, let me mark it. And this particular place indicated that we're in a downtrend in daily time frame. What about in the 4 hours and 1 hour time frame? What can we see? So in the 1 hour time frame, everything is still pretty much the same. It's also indicated that down trade and this particular place. So this was the previous lower low. Our market pullback retracement to this place, but it's meant to be lower low as you can see. So it's also range to show that we are in the downtrend too. But what is our 1 hour 60 minutes time frame telling us? Because this is also very important. In the 1 hour time frame, I see that what market is is trying to be bullish at this place. Because the market can put this particular previous resistance, can see market has stored this particular place 2 or 3 times, but unable to bring market can break this place. It shows that what we are in a up we'll be in an uptrend. Anytime market go to this place, it's always bounces back. You get, but since I'm making use of this particular coin as an example, get if you want to enter into this particular coin, what do you do? So for me, I'll also make use of the 15 minutes time frame. On the 4 hours time frame, what can we see? You can see that the market was on the downtrend before. Market always tends to hit this particular resistance. If market can break this resistance, this previous lower high means that we'll be in an uptrend. But in the 1 hour time frame, you can see that it's almost as if you are in an uptrend gate. It's not the same way. What happened in 15 minutes time frame? 15 minutes time frame, we are saying that we're in an uptrend or this particular place, right? You can see we're in an uptrend 15 minutes time frame. So you can actually take this trade right here. So when we take this trade, it is very simple. What do I say? You look for the most recent break of structure to the upside. From what I can see on this chart, the most recent break of structure at least to the upside was actually this particular place. This particular place. So what happened was that when price go to this place, it broke structure to the upside at this place, and you can see. Can also call this, but the pullback really is very small. This might probably be liquidity. So what to do is simply simply draw this place out. Click on this place, draw this place out, you get draw it out. So this is your point of interest at this place. So and as you can see, what did I say? When you get your point of interest, you should look for what a gap, an other block or a gap, and you can see there's a gap from year to year. Get. So what we'll be doing next is wait for what? We wait for price to retrace back to this place. So if price retraces from this particular place back to here, we're looking for buy and we can take our profit, our TP from this particular place right here. So guys, this is how my trading strategy work. I also made a dedicated video on how to identify fair value gap and other block for those who don't understand. Yet also liquidity too. In this place right here, this smaller pullback actually liquidity. Get this award price market is going to clear before before it gets to this place. There are people who trade support and resistance. Most of them will actually because this place from what I've seen, this particular place has acted as what previous support, previous resistance. People who just clear resistance likely buy also from this space. So market, if they clear all of them and enter this space, get. So by watching this video, if you don't understand, let me know in the comment section so I can make a more clear video on this scheme value. But I believe I've done justice to it. You can also check my face, join my video and WhatsApp community as soon as next video. Peace out.